senior trader with weekly fundamental analysis. So let's take a look at what is happening around the major currencies and what will it be in a week. Well, let's begin with the Euro United States dollar, and it closed the week at 1.2997, tumbling over 130 points. After gaining almost that much the previous day, Mr. Draghi painted a rosy picture of the Euro Union and assured the markets that the recovery was underway. He also suggested that there was no near-term chances that the ECB would consider a rate decrease helping to support the euro. The zone is back in trouble as no data seems to support Mr. Draghi's comments. So the eurozone, however, is attempting to stave off the disaster of a returned financial crisis for the region, and Italy is at the center of the latest flare-up after its election left the country incapable of making the decisive moves to answer recession and deficits. So, watch the euro specifically during the European session on Monday. So, all in all, neither the recent appreciation of the euro nor the uncertainty regarding the impact of the Italian election has altered the ECB's central scenario significantly. It is prolonged status quo. So also we believe that beyond the first few months of this year, EMU inflation could prove stickier than expected by the ECB. So far it seems that the ECB wants to focus on the transmission of its accommodative monetary policy to the real economy rather than adjusting rates lower. So the United States dollar soared on Friday after the US non-farm payroll report far exceeded expectations and also predicted a strong possibility that the Fed might need to reduce its monetary stimulus to adjust for better employment numbers. And back to Great Britain, the GDP United States dollar continues its search to find a bottom, returning at the end of the day Friday to close at 1.4912 after climbing the previous day after the Bank of England meeting, as rates and policy were maintained. The lack of change by Bank of England took investors by surprise and helped the pound to recover only to tumble on the strength of the United States dollar on Friday. The recent run of economic data have not been great, but nor have they been disastrous. The month-long plague has pulled sterling down nearly 1,500 points from its peak on the opening day of the year. The dollar certainly has something to do with it, because the pound is bigger play here. Where the market is starting to see the finish line on the United States stimulus horizon, the Bank of England seems to be walking up to the starting line. The fact that the sterling didn't really, after the Bank of England held rates this past week, suggests expectations for easing the growing stream. And United States dollar and Japanese yen is moving back to historic highs to trade at 96.04 after hitting 96.56 in late trading. The United States dollar gained momentum. The Bank of Japan will see a new leadership prior to its next meeting, and the new director promises unlimited monetary stimulus to support the Prime Minister directives to combat deflation, while the old leadership is opposed to this amount of stimulus, saying that the economy has reached a bottom and is making a turn for the positive. So we'll hope for it. The weak Japanese yen continues to push the Nikkei to historical high, trading above 12,000 this week. Global real sales shifted into high gear in the opening month on 2013, which purchases in January soaring 13% above a year ago, the strongest gain since early 2010, when the global economy was building momentum in the early stages of the current global economic expansion. Chinese weekend data for retail sales and industrial production is expected to post comparable 10.3% year-to-year and 15.2% year-to-year rates of growth respectively, and the figures rarely surprise. China led the way with volumes soaring 49% year-to-year, but the improvement was broad-based with every region, excluding Western Europe, posting solid advances. Car sales across Asia jumped 30% year-to-year, including a 6% increase outside of China. And the last, not least, gold. Gold closed the week at 1,577.80, moving with $25 range for the entire week. Gold remained directionless for the week, moving in response to possible stimulus from the FOMC in upcoming meeting and the strength of the United States dollar. This past week, the metal managed a range of only 25 through the entire week, a particularly quiet market, and the end of the multi-month decline often piques speculators' interest at the dream of how quick a reversal could be on an extended trend. Yet we should be open to the alternative as well. A burst of momentum behind the prevailing trend could break 1,500. So the deciding factor, the net stimulus outlook. The only thing more remarkable for the markets past week that the Dow Jones Industrial Average hitting a record high was the United States dollar's incredible run. The critical fundamental question here now, one of the world's most recognizable safe havens can advance with such abandon, at the same time the most basic risk measure is on a record-breaking run. So it isn't a fundamental shift of the dollar's orientation to risk, but a side effect of the manipulation in risk itself, so stimulus. And I suppose that's all for today, for this week. Future. More details you can still find on our site www.grandcapital.net, and have a nice and profitable not only day but the whole week. Goodbye.